legit. Anything you want.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host here. Thanks for tuning in. I'm also glad to have Brian London, my co-host, with me today in New Orleans. We have a repeat guest, Chris Martenson. He is with Peak Prosperity, which he founded along with Adam Taggart. He's a longtime friend of Gold Newsletter and the New Orleans Investment Conference. He's been in attendance, and his background is, economic researcher and futurist with specialties in energy and resource depletion. He has an MBA from Cornell and a PhD from Duke. And I was just saying to Brian before we started recording that Duke is an incredible economics department. Assuming you got your PhD in economics, is that correct?
No, it's in pathology. I'm from the science department there.
Oh, wow.
As I like to say, I'm not an economist, but I play one on the internet.
Sure. Well, they have at Duke, they have a wonderful history of political economy program. Yeah. So it's a great place to be.
Well, pathology may be more appropriate for the economy anyway.
Absolutely. And, when you need somebody to conduct a postmortem on what happened, I am your guy.
Well, we're more interested in a pre-mortem, I think, at this point.
Well, I can provide that too.
Okay. Yeah. Well, so Chris has just published about a week or two back an extended report, which we shared through Golden Opportunities, a project or publication of Golden Newsletter. And it's titled 2019, The Beginning of the End. So a very intense title there. So in the description, it basically claims that, I guess, there's a confluence in 2019. So first I should say, Chris, welcome back to the show, and we're so pleased to have you.
Well, thank you. It's a real pleasure to be back with you and all your listeners.
Yeah, in that report, The Beginning of the End, I have to say it's very light reading, very uplifting. If you're really in a bad mood and you want to put a smile on your face, just take a gander at it. But in all seriousness, it's extremely compelling. As Fergus was saying, there's a confluence of events that are long in the making, but seem to be coming to a point. And this is probably the next 11, 12 months look like a period when a lot of these are really going to come to a head.
Well, I think so, and they've been building for a long time, and that's part of our thesis at Peak Prosperity, Brian, that's been concerning us for a long time is that the longer you delay an inevitable adjustment, sometimes the worse it can be. That it's always better in my world that have a problem or predicament you're facing, you get to it right away. And honestly, we can trace the financial predicament back probably to the 80s if we want to go back far enough, but then Greenspan had this wackadoodle idea that he could replace a business cycle with a credit cycle. It blew up on him in 2000, no learning, blew up again in 2007, no learning, and here we are. And so just economically, one trend economically is we've been attempting to grow our credit markets at twice the underlying rate of the economy. That is, the claims are growing twice as fast as the stuff. And that's a bad idea economically. We can look at that. We can say that's not a good trend, but that's what the central banks are extending, delaying, denying, attempting to push off. That trend is coming due, but there are other ones as well. And when you put them all in one spot, it makes for light reading.
And you've been talking, and I've been talking about the debt issue. And one of the things I tell people is I've been involved for our conference in the hard money arena, the hard money sector, which is, pretty much doom and gloom, as they say. And I've been involved in that for, spanning 4 decades now. And I've heard about the debt bomb, and it's going to blow up for many, many years by many really very smart, respected people, but have been saying this for years. But now I'm really worried. I mean, if you look at, I really do think it's coming to a head. If you look at the last year, they're talking about the deficit is about $790 billion, which is bad enough. But in actuality, in 2018, the debt grew $1.2 trillion from one year to the next. And that's because there's about $400 billion of spending that's on autopilot, that's off budget, that's just happens. And it doesn't get accounted in the budgetary deficit or surplus. If you look at last year, in fact, we grew by $1.2 trillion in the debt, but $1 trillion of that came in the last 6 months. That's unbelievable. I mean, I don't think it's quite that bad, but that's a run rate of about $2 trillion a year. And, people who think that the debt is about to get out of control, I think they must have been in the bathroom during Act 2 of this play, because the debt is already out of control. We are already there. And I think that just points to what you're saying, that 2019 is going to be a pivotal year.
Well, it really will. And, when we just talk about those deficits and then the resulting debts that come about, none of this should be a surprise, right? One of the things I like to track is you look at it's called the MTS. It's the monthly treasury statement, and they'll tell you how much cash they're taking in. I love this statement, Brian and Fergus, because it's not adjusted. It's not hedonically sampled. It's not anything, right? They just, how much money is the Treasury taking in from tax receipts? Well, no surprise, year over year, corporate tax receipts are down 17%. Here's a shocker, though. Personal tax receipts off wage withholding are down 4%. So if your two main sources of revenue are down and your spending is up, voila, you have these deficits that are out of control.
Why, just let me pause you there. Why are those two sources down?
Well, it was the tax overhaul. So the corporate tax rates were cut very, very aggressively. And so that led to a big decline there. But the 4% down in the wage withholding, I can't make sense of that because allegedly we have 2.6 million more people working. We have 2.9% year-over-year wage growth. So we have 150 million people getting all of that 2.9% wage growth on average. And the tax overhaul only ticked the top marginal rates down by a maximum of 5%, but typically 2 to 3%. So there's something missing there, and this is a point I've made recently at my site, is if the government is telling you through hedonically sampled, adjusted, seasonally massaged numbers that employment is way up, but their tax receipts on wage withholding are way down, you have to pick one of those. I like the wage withholding one, not because it tells me the story I want, but because it's a number that it's apples to apples. There's no fudging. There's nothing they can do about it. Either the money came into the account or it didn't, right? So that's a number I track more closely to give me a better read on where we really are in the employment story than the other ones.
I'm not a big critic of the tax cuts because my fundamental view is that lower taxes are always better. But the whole idea behind lower tax rates is that you're going to starve the government, and the government will prevent the government from spending and creating the huge deficits. Well, that obviously hasn't worked. Now we have some apologists for large deficits and ever-growing deficits coming out with this modern monetary theory. That's a buzzword that really just kind of exploded out there over the last couple of months and is gaining some traction on the more liberal end of the spectrum economically. And to me, it's just, as I said, an apology for spending and spending without any repercussions whatsoever. What are your thoughts, Chris, on that? I've been very curious to hear what you guys are thinking about that.
Well, I have to confess to a couple things about this MMT movement, such as it is. It's been around for a while. I actually respect some of the people who are advocates of it. I have a full confession. I don't quite understand it, because they talk about things that fundamentally don't make sense to me. So One gentleman was arguing very, very vociferously, maybe a little bit too strongly, almost with a religiosity, that the government doesn't deficit spend. They release treasury obligations in order to help control the interest rate. And I was like, no, that's not even remotely what happens. That's not the mechanism I understand. The treasury issues debt because they need cash. And it's the Federal Reserve that's in control of the interest rates, and they do it through a variety of mechanisms. And so we just have a different mechanistic understanding of it. That's part one. But part two is that often I think they're confusing the idea that the Federal Reserve is actually part of the federal government, and it's not. It's a private entity, and it has private profits, and it remits some of those to the Treasury, but it does not it gets to choose what it wants to do with the rest of them, including paying interest on excess reserves, which is a decision that's made, right?
Mm-hmm.
And they have a 6% dividend. And there's a whole variety of things that if MMT, to me, you might get me to begin squinting at it differently, Brian and Fergus, if they said the Treasury is now going to issue its own bills, right? Oh, fine. But it's not. That's not the mechanism. It's a Federal Reserve. That's part one. Part two, it's impossible to print your way to prosperity. This whole idea that you can just throw money out there and that taxes somehow represent a drain on the money supply, which it isn't. You and I both know this, right? Taxes are a way for government to secure more money to spend back that stuff doesn't stay in their hot little hands usually for more than one month cycle, right? It comes in and it goes out. Boom, very little rainy day fund building going on. So I don't even understand the mechanism of ebb and flow. Look, if the government is basically in the business of emitting base money, that is something that then goes out into the credit ecosystem of the banking structure and creates a lot of the usual things you get, including credit cycles. So I get where MMT's coming from. It's a wonderful idea that the government can spend as much as it wants. And you know what? I might even be sympathetic to that if the government spent it on stuff that I could believe in. Like when I go to China and I get on a high-speed train where a glass of wine won't even have ripples in it as you travel 180 kilometers an hour to the next place, I could say, okay, I could see an economic benefit to that. The U.S. government right now is spending its money mostly on foreign entanglements, which, as far as I can tell, deliver no value to anybody except the military-industrial complex and some related hangers-on. Otherwise, I derive no benefit from that because I'm not in that business. So I don't really believe in the things my government is spending money in right now, so I don't believe that they should have the right to just spend as much as they want on anything they want. But, now we're down into sort of personal preference territory.
Every month, for nearly 50 years, Gold Newsletter has unearthed high-potential investment opportunities in metals and mining stocks that mainstream investors didn't even know existed. The value and profit potential we pack into each and every issue of Gold Newsletter make it an absolute steal at just $198 per year. Your subscription includes 2 special reports, Money Multipliers, resource stocks poised to triple, and the Investor's Guide to Gold and Silver. To subscribe, visit www.goldnewsletter.com and click subscribe now to discover how to multiply your returns in today's gold bull market.
I agree with you. First off, I don't understand MMT, and I think the reason why I don't understand it is precisely what you said. The people that are espousing it aren't making any sense. So if there was a logical flow to it, then you could perhaps understand it but disagree with it. I don't think there's any logic there. I don't see how one leads to the other, and I think it really is just an excuse for spending money. And I agree, if they were spending the money, if the government was spending this money on certain things that were of some value, that would be great. But I'm a big believer that the government really doesn't spend any. It doesn't do anything as well as private enterprise can. And if it creates a high-speed rail system, all that is recovering a bit of the waste. The money still could have been spent better some other way. But we're still at the point that you cannot spend without any repercussions. You can't create debts like this with wild abandon and not expect some repercussions at some point. So far, it's all been inflation in the financial markets, which of course was their whole goal, was to create this wealth effect by pumping up the financial markets. And like many people have said, you have that correlation. If you built it on the way up, when you start taking the punch bowl away, when you start removing that monetary opiate, then you have to expect that these markets are going to go down. And that's, the lesson we're learning right now.
Well, that was the lesson. Unfortunately, it stopped already. So we had collectively across the big central banks, that's let's call it China, Japan, the ECB, and the Federal Reserve, okay, those 4, we saw their collective balance sheets begin to flatten out starting in June, and they actually wobbled down by a few tens of billions collectively by late November, and then December happened, which volatility happened. That's code speak for stocks actually went down, right? They freaked out, and since then, all their collective balance sheets have gone up by quite a lot. And it was just yesterday in the A section of the Wall Street Journal, kind of buried, just a 2-paragraph article said that the European Central Bank is considering reversing, that is, adding more QE at this point in time because they're worried about whatever they're worried about, weakness, softness, but actually they're worried about stocks not going up, right? And the Federal Reserve has come out, and Jerome Powell, who I thought for a couple days, fooled me once, was going to be different from his predecessors. Nope, he caved, right? So we're already, we're sorry about we'll have no more interest rate hikes, which aren't really truly interest rate hikes like of old. They don't remove liquidity, and they're talking about stopping the run rate of the balance sheet reduction. And Bank of China freaked out and just threw a ton, trillion yuan in all at once. So we're seeing already. So Look at what, if you follow that story, check this out. They were throwing in upwards of $200 billion a month across those big four, and that allowed stocks to go up. They simply stop throwing that amount in, and stocks start to fall. So we are now, everybody ought to be a little worried by the idea that unless the central banks are throwing tons of money in, the stock markets and bond markets will fall. That's not a good position to be in. We've never been here before in history. I can see why the MMT people are suddenly coming out because, boy, we're going to need some giant relief valve to try and get out of this mess, which we shouldn't have been in. We shouldn't be here. 2008, that was the time to say, wow, we tried 2 credit cycles. They both blew up. Bad idea. Let's not do that. Hey, we're going to have to lose a couple of August firms like AIG, Citi, maybe Goldman Sachs, tough nuts. We're out a couple of financial workers, and let's not do that again. But we didn't. We went the other direction.
Yeah, they gave aspirin to alleviate the fever, but nothing to cure the underlying disease.
Which, again, we're growing debts at almost 9% a year compounded, and the GDP is growing at a fraction of that rate, right? Half. So you can't do that. You can't have the claims constantly growing twice as fast as the underlying economy. Imagine if your mortgage on your house, let's say your house is worth $500,000. Let's say your mortgage is also for $500,000. Let's imagine that your house is appreciating at 10% a year, but your mortgage is accumulating at 20% a year. Just run those numbers. Put it in a spreadsheet. A couple of years out, you're feeling pretty ill, right? It doesn't work, right? The assets and the liabilities always have to line up. And that's where the MMT people go off the rails. They're trying to pretend like we can ignore a whole section of the balance sheet. It just doesn't matter. Oh, Chris, we owe that money to ourselves, so we can ignore it. Like, no, you can't. Japan's trying to ignore it, right? Japan has a declining population and a shrinking workforce because, their population's declining and aging. So the number of people, that's who debts are being paid by. Debts aren't paid by your elderly. They're not paid by your young. They're paid by the workers. Your workforce is shrinking in Japan. Their debts are skyrocketing, and their per capita or per worker debt is going through the roof. And everybody's saying, but it's okay, Chris. They owe it to themselves. Well, it's a little over $1 million of Japanese sovereign debt per working household in Japan right now. That's what each household has to pay back eventually. It's not going to happen.
The whole thing about they owe it to themselves or we owe it to ourselves is ridiculous because that just means that what happened was money was created without any underlying liability whatsoever. It was literally helicopter money that just went out into the economy, bought things, and was just created out of thin air. I actually had the opportunity to ask Alan Greenspan about that. And, he agreed with that sentiment, but he went on and said the real issue is in regard to the debt isn't so much the debt, it's a big issue, and the underlying liabilities. But with Dodd-Frank and these too big to fail institutions, the U.S. government has essentially backed all of the derivative liabilities of all the too big to fail institutions. And his point was that total is incalculable. It dwarfs everything else. We don't know how big they are. I tried to find some estimates on at least the notional value of those, and the term quadrillion started coming up. It's just literally unimaginable how large that is. So yeah, like we're saying, the debt's one issue, but there are a lot of other issues out there.
Yeah, Chris, we know you talk about the 3 E's. Mm-hmm. Economics, environment, energy, or the economy, environment, energy. So I assume in this report, 2019, the beginning of the end, you give a great deal of attention to the other 2.
Well, I do, and that's actually where my larger concern lies. In the environment, there's a number of trends out there right now, and we've been tracking them for a decade, and we'll keep tracking them, that are really disturbing. When each one you might be able to explain a little bit, but just to take a quick tour through them, we're finding that whether it's the kauri trees in New Zealand, one of which is 2,500 years old, or the baobabs in Africa, which are over 2,000 years old, all over the northern hemisphere, too, all the oldest trees are dying all over the place. And so these are trees that have been through thousands of years of history, and all of a sudden now they're dying. And so you go, well, maybe there's some explanation. It's a fungus in New Zealand, and we don't know what, a lack of rainfall in Africa, who knows? And then you discover that amphibians all over the world are dying. Like, I was a nature boy when I grew up. I loved catching frogs and toads and salamanders. and they're almost impossible to find. They're endangered everywhere. I mean, everything from leopard frogs to tree frogs, you name it. And they have a strange mold that seems to have gone across the world and hit them. In preserves in Costa Rica and in Puerto Rico, they're detecting that ground insects, the ones that are found not in the canopy on the ground, are down 98% in their nature preserves. So what happened there? You know, they don't have any answers for that. And you or I might notice that our windshields are now completely clean when we drive long distances across the country, and monarch butterflies, a sentinel species, are down 90% at this point. Maybe now we're thinking they might go extinct, right? So phytoplankton in the ocean down 50% in the last 40 years. And that's the bottom of the food chain. So these things, economics is fun, and money and stocks and gold, all that's fun. But if we wipe out the bottom of the food pyramid, you know, my PhD is in a biological science. So I was trained in the biological sciences, took all the basic biology, ecology, you know, molecular stuff like that. So my training says humans are organisms, and all organisms have this feature where they will grow into their available food supply, but then they end up poisoning or running through their food supply in one way or another, right? They poison their environment or run through their food supply. That seems to be what's happening. When you add up all of these ecological indicators, I think an intelligent species would throw up its hands in a T sign, blow the whistle, and say, time out. What's happening? We need to understand this better, right? And that would be a logical response. Like, let's just, anything new chemically that we put on the market in the last 20 years, if somehow that's responsible for the 20-year decline in insects, maybe we should just pull it off the market for just a couple years, right? And somehow we can't organize ourselves to do that because Bayer and Syngenta have profits and Monsanto needs to make money or something, right? It's never a good time. And so nobody's talking about that. And I watched the Davos World Economic Forum go off, and all they talked about was how we're going to grow fast, really fast, super fast, or even faster than that, right? And that growth is now something that is being done in a really unconstrained, unintelligent fashion, which is wiping out the bottoms of the food chain, which to me is a tragedy. If I wake up one morning and there's no more warblers, migrating back through, I'm going to be sad, right? And if there's no more fish in the ocean, that's going to be really awful on a lot of levels for me. Not just economically, think of the poor fishermen, but that's a tragedy. That shouldn't happen. I think the next generation has the right to have the same childhood I did, which was abundant and full of life, which was mysterious and fascinating and drew me out of my house and got me outside and in wonder of it all, right? So there's something happening here, and that's, something that I detail in this report is those and other indicators, which, again, individually you might say, well, we can explain that. But when you put them all in one spot, you kind of have to say, look, there's something else happening here, and we really need to understand that. And to me, people get it. People already know something is really wrong, even if unemployment's low or wages seem to have gone up. They know something else is wrong, and it's more than Trump. They don't like him, or they don't like Pelosi, or whatever their story is. Something's wrong. This starts to explain the Yellow Vest movement in France, which, by the way, if anybody listening to this doesn't know what's happening in France around Yellow Vests, no surprise, because your media isn't talking about it. They can't not talk about it fast enough because the people of France have reached their breaking point and said, we're tired of being harvested as wage slaves, but they also, if you listen to them, they say, we don't want Monsanto putting their junk and poison on our fields anymore. They're alarmed by what they see happening ecologically. They're alarmed by what's happening economically. And if we wander into that last E, energy, there's an alarming story there. Again, intelligent, prudent adults really need to come together and have a conversation that's not happening at the official or the macro levels right now.
It is amazing that Yellow Vest movement, how that isn't being covered. If it wasn't for Twitter and other social media, we would have no idea what's going on over there.
None. I wouldn't.
And what about the energy angle there in your report?
Oil's everything in this story. And the United States is currently suffering under the delusion of believing it has infinite amounts of oil. And it's true, we're pumping a lot of oil out of the shale plays, but these are the last basement remnants. This is called the source rocks. There's no pre-source rocks. This is it. We're drilling into the shale basins. They're amazing. There's also a story there economically where collectively that industry has done nothing but lose money the entire time it's been in existence, and that may change, but we have 12 years of experience in it. So it's a money-losing proposition at current oil prices. At every oil price, it's been a money-losing proposition. I think there's a level at which it does make money, but that's a much higher level of price from here. But at the point here, Fergus, it's not endless. We can use it. I think we should use it, but we ought to be asking the prudent question, which every business asks themselves, or every prudent human is, what's my strategy with this stuff? A strategy consists of two parts. I have a vision, and I have a sense of how I'm going to achieve that vision. In other words, I know where I'm going, and I know how I'm going to get there. And that how I'm going to get there is your resources. Guess what? Visions are easy to come by. The resources are always the constraining part. How much money do you have? How many people do you have? What talents do they have? Whatever. So our country has energy resources, and we really ought to be asking the question, where do we want to be when, not if, but when that stuff runs out? And maybe it doesn't run out for 100 years, but a good strategy says, where do we want to be in 5, 10, 20, 30 years? Well, the truth is every shale field seems to have about a 10 to 20-year lifespan before it peaks out. And we've already seen them peak out in the Haynesville, the Barnett, like big shale basins that we first started on. We're like, yeah, these things are forever. Oops, 12 years later, we've hit peak on them, right? The Bakken will peak, the Permian will peak, even though that's not just one basin. It's got multiple levels. So that's a bigger play. It'll have a longer lifespan, but that's the crown jewel maybe of the world. But it'll still peak. And when it does, we're going to discover that we ripped all the oil and gas out of the ground so fast that we had to flare the gas, and we had to export the oil because we didn't know what to do with it. And we're going to really wish we hadn't done that. We're doing something really, really stupid with that energy right now.
Well, Chris, I hate to we're going to finish on that maybe not so positive or not so uplifting note. But what I think we should do, because we've already ran through the half hour, is that we're going to invite you back on for a round 2 of this, because you've explained the challenges you see before us, but we've not gotten to the part 2, which of course is what you call the prudent action, how to respond to the situation, and we should do that at a later date.
Well, if I just could very quickly, the solution side of this, Adam and I cover in our yearly seminar, which is April 26th, 7th, and 8th. That's Friday, Saturday, Sunday. That's out in Sebastopol, California.
Okay.
And if people come to Peak Prosperity, they can come and check that out. But that's where we spend 3 days discussing what do you do about all this. We don't spend any more time problem definition. People get that. That's where we talk about it.
Yeah, and I'd like to add that I strongly recommend that seminar. If you look at the invite list and the exclusive group and the location, it just seems to be a fantastic event, and I really strongly recommend that for anybody who's looking for not just solutions to each individual issue that we've been talking about, but a real holistic approach to life and lifestyle that will prepare you no matter what happens and improve your lifestyle in the meantime. So it's really a no-lose proposition.
Indeed. Thank you for that.
Excellent. So the website is peakprosperity.com, and you can always get the show notes and links at goldnewsletter.com/podcast. Chris, thanks for your time. We look forward to having you back on, I hope, in the near future.
Thank you, Fergus. And Brian, wonderful talking with both of you today.
Cheers.